What's up, guys? This is Mr. Baloo. I hope you all are doing well, enjoying your quarantine, social distancing. Hope you all are staying safe and that you guys are still learning. Me and Dr. Hayner are still trying to help you guys learn so that you can just be more prepared for your future. So today, I'm going to be just talking a little bit about mutual funds. What are they? What's the point of them? Why am I telling you? So, first of all, basically what you are doing is you have an amount of money that you want to invest. Well, you can hand it to a mutual fund, invest it into a mutual fund, and then there are people who manage that mutual fund. They're called money managers, and they decide, oh, I'm going to invest this money in some stocks, some bonds, some money markets. They take your money and they do the work of choosing where to invest it for you so that you can not have to do the research yourself of where should I put this money. Maybe you don't know how to choose stocks or bonds for yourself. And so mutual funds can help you do that. Mutual funds can be structured for your investment goals. So are you looking for a higher risk, high reward investment? Or are you looking for something that is safer? You want to make sure that you don't lose money. You want to have a decent return over a decent period of time. Maybe not the most return you can possibly have, but depending on your risk tolerance, that may be a better option. But whenever you're investing, generally, if you are investing in something that has higher risk, you want to make sure that you're getting more reward out of it. So I talked about this a little bit, but how do mutual funds work? Well, you give your money to the mutual fund, whatever company or brokerage is offering the mutual fund, and then the money managers take that money and diversify it. And that just means to spread it out so that all of your money isn't in the same place. Because if you think about it, if you invested all of your money into one business, well, then if that business does well, then you're going to do great. But if that one business fails, you're going to lose a lot of money. Whereas diversifying is just taking that same amount of money, putting it in a lot of different companies, bonds, so that if one of your investment doesn't do well, you can still make money if most of your companies do well. So the net asset value is basically just of all of the different investments that the mutual fund has. It could be literally hundreds of different stocks or bonds. If 50% of them go up, 50% of them go down, the net asset value, and it kind of equals out, the net asset value will go up. But say 70% of the assets within the mutual fund improve, well, then there's a good chance that the overall price of the mutual fund share would go up. So whenever you're investing in mutual funds, you are basically buying a share within that particular fund, and the average of all of the different investments within the fund is what the share is going to be worth. And you can see that with the formula I have down here. So some advantages of mutual funds. We talked about it being highly diversified, and that lowers your risk. Something that you can liquidate. And when I say liquid, that means that you can convert it to cash. And some assets are very liquid. For example, your savings account, your checking account, you can turn that to cash very easily. Whereas some investments are a lot less liquid. For example, your house. To liquidate that, you'd have to put it on the market. You might have to get realtors involved, and it's just not as easy to liquidate. And mutual funds, you can liquidate them, but you don't want to just be putting money in and out of a mutual fund all of the time. A big advantage of the mutual fund is if you want to invest your money, you want your money to work for you, but you don't want to have to worry about it all of the time, then this could be a good option because you have the people that you are paying to manage it for you. So you can just put the money in, set up your mutual fund, and then forget about it. And you can also look at the history of how a mutual fund has performed and compare different mutual funds to one another. So, some disadvantages of mutual funds. I've talked about how mutual funds have somebody you are paying to manage your investment portfolio. Well, that means that you are going to be paying them fees, and that's how they make money. They don't necessarily make money from how their fund performs, but just the fact that you are paying them to manage it. And so that could be considered a pretty substantial disadvantage. So the next point I have is that an index may outperform the mutual fund. And what this means is that you're paying these quote unquote experts to manage your fund, but the market can be very hard to predict, even for experts. And so if you decide to invest in just an index of the top 500 companies, and you just decide to do that yourself, that may do better than having the experts that you're paying to do it for you. If you just invest in the essentially stock market as a whole, it may perform better than a specific mutual fund. And then this third point, a term, herd investors may drag the mutual fund down in bear market. So what this means is that you're invested in a mutual fund, a lot of other people are invested in the same mutual fund. And a bear market, which Dr. Hanna has talked about, is whenever the market is going down. Whenever we have a market crash or a recession, anything that is causing the market to trend downwards, like the coronavirus, that is something that caused the market to go down. But whenever the market goes down, that doesn't necessarily mean that everybody should just pull their money out of the stock market, because if everybody does that, then the market just keeps going further down. And so other people who own the same mutual fund as you, if they decided to do that, then they could bring your mutual fund down. And so that is something that if your mutual fund isn't personalized to you, which they're providing this service to hundreds of people, then that is something that could be a concern. So hopefully this was able to give you guys a little bit of just a little bit of information about mutual funds, what they are, what the purpose of them is. And if you have any questions, I'd be happy to try and answer them. But thanks for listening, and hopefully you found this helpful. Bye.